The growth in cryptocurrency and decentralized finance encourages many people to embrace digital assets. This has increased the overall number of crypto investments and transactions. Consequently, more crypto exchanges have emerged to serve the growing demands of investors and traders. However, despite the numerous crypto exchanges in the industry, traders still experience some difficulties carrying out profitable transactions. There are challenges to liquidity in most prominent exchanges. This is where ORN jumps in. Uniswap is an example of one of the core products in the DeFi ecosystem, the Decentralized Crypto Exchange, or DEX. DEXs aim to solve many of the problems of their centralized counterparts, including the risk of hacking, mismanagement, and incidental fees. However, decentralized exchanges have their problems, mainly lack of liquidity, which means a lack of money sloshing around an exchange that makes trading faster and more efficient. At the same time, Orion Protocol is a project that aggregates liquidity from the entire crypto market to a single decentralized platform. The protocol's unique functionalities proffer solutions to some DeFi prominent issues. These problems include a lack of trading pairs, liquidity, and special trading tools that meet traders' demands. The protocol gathers all crypto exchanges' order books into a single easy-to-use platform for users. While other decentralized liquidity aggregators operate within the DeFi space to gather liquidity, Orion Protocol goes beyond that. The new project also aggregates liquidity from centralized digital exchanges and the DeFi ecosystem. Do you also think this will happen? Watch this video until the end if you want to know why. What exactly is Uniswap? Uniswap is an innovative decentralized exchange protocol built on Ethereum. More specifically, Uniswap is an automated liquidity protocol. There is no order book or any centralized party needed. Thanks to the contracts built into its protocol, Uniswap can allow users to trade without intermediaries, achieving a high level of decentralization and censorship resistance. Uniswap has devised a protocol that relies on liquidity providers, creating liquidity pools that then provide liquidity across the platform, allowing users to seamlessly swap between essentially any ERC20 tokens, all without needing an order book. Since the Uniswap protocol is completely decentralized, there is no real listing process like a centralized exchange has. Any ERC20 token can be launched for trading on the Uniswap platform as long as a liquidity pool is available. Because of this, Uniswap does not charge any listing fees, making it an essential resource for new or smaller ERC20 projects. Now, what is Orion Protocol? Orion Protocol is an open-source decentralized blockchain platform that acts as a liquidity aggregator for centralized and decentralized exchanges. Orion Protocol was created to provide cryptocurrency users and traders with the best rates for trading tokens and coins across multiple exchange markets and platforms. Orion Protocol collects liquidity from a great variety of exchanges so that users can get the best rates and lowest fees for their trades. The system manages the liquidity from exchanges to transform it into a single API that finds the best routes for users. The system is also based on order books. When an order is made, the aggregator immediately searches for multiple routes until it delivers the most suitable trading rates for network users. With Orion Protocol, trades become simple and easy as traders don't need to search for the best rate themselves, which would require them to find, access, and compare various exchange platforms. Users also don't need to get used to many APIs and features on different exchanges. Network users can manage and access their assets with Orion's non-custodial solutions. Orion addresses one of the biggest issues on centralized exchanges, hacking by providing non-custodial solutions for asset management. How does UNI work? Uniswap ditches the traditional architecture of digital centralized exchanges, making the order book a thing of the past. This is made possible due to their constant product market maker design, which is a variant of a more common decentralized exchange model known as automated market maker. Automated market makers are smart contracts that hold liquidity reserves or pools that traders can use to trade against. Incentivized liquidity providers fund these reserves. Anyone able to deposit an equivalent value of two different tokens in the pool is capable of being one of these liquidity providers. In return for their stake in liquidity pools, traders pay a fee to the pool distributed to liquidity providers according to their share of the pool. Liquidity providers create a newly available trading market by depositing an equal value of two tokens. These can be ETH and any ERC20 token or two ERC20 tokens. Often, these pools are made up of stablecoins such as DAI, but this isn't mandatory. In return for creating markets and providing liquidity so traders can trade, Uniswap liquidity providers are rewarded with liquidity tokens, which typically represent their share of the entire liquidity pool. When you compare UNI versus ORN, consider such factors as Uniswap versus Orion Protocol transaction time, the usability of both coins, and the perspectives of the projects supported by UNI and ORN. These details will help you see whether these coins will grow in value or, on the contrary, will drop. How does ORN work? Orion Protocol forms an entire ecosystem for traders by unifying the whole crypto market in a single API. Orion offers a full suite of features, tools, and products for traders and crypto users, including a portfolio management application, trading terminals, enterprise trading, liquidity boost, app store, and DEX launcher. With all these widely available features and products at their disposal, users can trade tokens and cryptos at the best available rates. Orion seeks the most optimal routes, so users don't have to search through different exchanges to find the best trading opportunities. Users can also manage their assets within a single application with the Orion Portfolio Management app, which shows all relevant trading data for individual traders. So what makes Orion Protocol unique? One of the factors that make Orion Protocol unique is the project's goal, which is to reduce the risks involved with trading on decentralized and centralized exchanges. Orion Protocol also finds the best trading routes for network users with the most favorable fees and trading rates. The project aims to create a one-stop ecosystem for traders and cryptocurrency users. Traders and crypto users can make the most out of liquidity on the protocol, manage their assets, and access apps for trading and other purposes. As a unique project that unifies multiple crypto trading and blockchain-based services, Orion Protocol simplifies trading by finding the best options for traders instantly. The system is secured through automation and staking for voting and liquidity, while the protocol also performs regular and thorough audits. With the launch of the Orion Protocol mainnet, the network was fully audited for security purposes by Coti. Coti is a security company that ensures and checks the overall correctness of smart contract operations. You may have heard of staking in the Bitcoin realm and being rewarded handsomely. What if you could make it better? What if you could earn a lot of money by staking your ORN tokens in real-world applications? We've done all the legwork for you. You receive a portion of the terminal transaction fee from the broker you voted for when you stake your ORN tokens on the Orion terminal. The incentives shared with you increase as the daily protocol volume increases. Activity through the terminal might be profitable for individuals staking ORN, with numerous decentralized exchanges currently earning approximately $1 billion in daily volume and centralized exchanges generating between $2 billion and over $20 billion daily. Moreover, Orion Protocol's value is defined by a variety of specific factors, including the technical capacity of the project, its technology, the activity of the dev team, and mainstream use and adoption. The roadmap plans also contribute to the project's overall value, while Orion Protocol plans to introduce a price oracle and high-margin DEX trading. The market value of the Orion Protocol token depends on a multitude of specific factors, among which is volatility. The cryptocurrency market has proven to be more volatile than traditional financial markets, like the stock market. The value of ORN may depend on essential events and elements like roadmap developments and the activity of the dev team, updates and upgrades, partnerships, integrations, mergers, and other important news. Orion Protocol is an important addition to the DeFi market as it acts as an aggregator for finding the best trading routes and provides liquidity. The project unifies various products, apps, and services that can help traders and enterprises with asset management, trading, and more financial features. As the expansion of the cryptocurrency market continues, Orion Protocol may prove to be one of the most prominent DeFi ecosystems in the sector. This unique project will continue to develop while the team moves forward with roadmap plans. Well, guys, that's all we have for you today. Which runner-up should we talk about in the next video? Let us know in the comments and we'll make a video about it. If you guys like this video, then be sure to give this video a big thumbs up. Also, if you don't want to miss out on any new future videos, then be sure to click on the subscribe button and turn on the notification under this video so that you're notified the next time we upload a video on the latest cryptocurrency news. Thanks for watching. We hope you have a great day today, and as always, we'll see you in the next video.